Hello, I'm Bernard Hickey from Interest.co.nz and welcome to 90 at 9. This is your morning briefing where you get everything you need to know in 90 seconds at 9 o'clock. Starting now with news, the New Zealand dollar is up strongly over the last day against both the US dollar and the euro. Overnight, the European Central Bank held its official cash rate at 0.75%. and it cut both its growth forecasts and its inflation forecasts. It doesn't see a recovery in Europe until towards the end of next year. Now, the euro dropped 1 cent on this, and there's renewed talk that the European Central Bank will cut its interest rates. All this meant the New Zealand dollar rose against the euro to 64.2 euro cents. That's up more than a cent overnight. And this is after the New Zealand dollar rose overnight and yesterday to 83.5 US cents. That's after there was a hawkish OCR comment and monetary policy statement from the new Reserve Bank Governor Graham Wheeler. All this has meant, rise in New Zealand dollar versus the US dollar and the euro, that the Tradeweighted index is up at 74.4 from 73.4 before the Reserve Bank's monetary policy statement. That's the highest since August 2011 and is just 1% below our post-float high. Markets were expecting before the monetary policy statement yesterday that the Reserve Bank would start talking about rate cuts. Didn't do that at all. Instead, Graham Wheeler focused on keeping inflation around 2%. He also says he's reluctant to use loan-to-value ratios and other macro-prudential tools, at least yet. He's working on them, but he doesn't see there's a need yet with the housing market rising too quickly. Also, he made very few comments about the high New Zealand dollar, only that it was a headwind for the New Zealand economy. He says there's not much that he can do to try and fix it. It seems the Reserve Bank is on hold now until 2014, but with very few chances of a rate cut. I'm Bernard Hickey. That was 90 at 9 from Interest.co.nz.